Hello, investors and traders. Over the last 3 years of having this YouTube channel, we've built a strong trust with our subscribers. On this channel, it's all about investing, trading, and achieving success in the stock market, in your portfolio. I don't sell you anything. I don't manage your money. Instead, I encourage you to build your own system. For the last 2 years, we've been advising you to buy on the pullbacks, and we've been spot on. From our picks on NVIDIA, Amazon, Google, Magnificent Seven, to even some swing trades of GameStop to Bitcoin, we've been spot on. In 2022, however, we were telling you to short the market. And a little bit before that, in Q4, we were telling you to buy commodities. In fact, the running joke was that during our videos, which you can go back and watch, we were saying buy lean hog, buy orange juice, buy wheat, and that they would outperform stocks like NVIDIA, Microsoft, and Amazon. That happened a few years ago. We see a lot of similarities to what happened previously repeating itself. While this bull market isn't over yet, it will soon be. Before the end of the last bull market, we started seeing commodities rise, even as the broader market was declining. We believe that smart money was moving into commodities. Now we're seeing the start of commodities move again. It might last for 3 months or 6 months, or just maybe 1 or 2 months. We could be early to start promoting commodities. But a commodity we are looking at today is palladium, which palladium is back in play after 2 years. Before we get started, here's a quick disclaimer. The information provided on our channel is for educational informational purposes only and is not intended to be a substitute for professional financial advice. We're not selling you anything, asking for investment money, or telling you to click on anything. Just remember to do your own homework. You can be educated by a channel, a course, a newsletter, but it still needs to be your decision and your system. Following anybody blindly is the wrong move. Now that we got the disclaimer out of the way, I want you to remember there are 4 phases in a stock, in a sector, in the overall market. They are the accumulation phase, growth phase, distribution phase, and declining phase. A stock cycle is a typical evolution of a stock price from an early uptrend to a price high through to a downtrend and a price low. There are 4 phases of the stock cycle. Think of an accumulation phase as a basing. It goes nowhere. It frustrates you because the last 6 months, 1 year, the price went from $50 to $55 and back and forth with no real movement. But then one day it breaks out, usually with volume, and it goes up. The initial breakout is the strongest, which is called the growth phase. And then we call a distribution phase, a topping out, and then back to a declining phase. Just on a side note, in 2022, at the end, the accumulation phase, 2023 into 2024, the growth phase, which all this we predicted, to now we're coming to a distribution phase. And this distribution phase can be 1 to 6 months, but we're seeing signs now that the Dow is reaching all-time highs, yet the NASDAQ is not following at the all-time highs, or another index isn't following at an all-time high. This is one of the evidence of a distribution phase that will lead to a declining phase, which is stocks fall. Now, I'm not telling you to short into this market right now. That's for sure. We think that we have one more very good run in the stock market coming soon. But thus saying that, could this commodity market break out where big money, institutional money, is sending money into commodities? The first commodity we're looking at is palladium. And I just want you to look at kind of an intermediate term look. If you remember, I told you about a breakout, and you can clearly see a declining phase. Sure, it went up a little bit, but still in a declining phase. And then an accumulation phase from about Q1, Q2 into Q3. And then recently, a breakout for the last 4 days. Now, when we were making these charts, we did not know what was going on today or what would happen. Now, palladium is up another 3% while we're filming the actual video. But thus saying that, there will still be opportunities to get into this stock, or commodity. We are also showing the ETF, PALL, which is easier for most beginners to follow, an ETF. But we trade the future contracts of the Palladium and not the ETF for various reasons. But thus saying that, to show you the movement of the Palladium, we're looking at the ETF. And we're officially saying Palladium initial bullish recommendation, do buying on pullbacks to 90 to 95 with an investing stop of 77. 77 is the recent low and pretty close to a 2-year low. Now, if you go look at a bigger picture, you can see the whole cycle play out, where somewhere in Q4, it bottomed out, and then we had a breakout, and it went up higher. And then we had a distribution, and this distribution kept leading to a declining. And then for the last 2.5 quarters, we had accumulation. And just recently, 3 or 4 trading days, we've had a breakout. If you go to the overall commodity index, you'll see the same pattern happen. Q4 2021, a slam dunk straight up, and then a declining phase, with thus leading to much declining phases. Could this be the breakout that we're looking for? Time will tell. Now, Palladium is a base metal, and you can see recently, 3 days, we're looking at a breakout. Further down in this video, we're going to be talking about breakouts and specifically going over what is a breakout for us. But if we're getting specifics, I'm telling you the commodity index for us in the stages is neutral. The base metals, based on the last 3 or 4 days, is in a growth phase. And also, physical Palladium is in a growth phase. Based on these charts, breaking out. A picture is worth 1,000 words, and I've seen this before. Now, could Palladium go back lower? Absolutely. But it's further building a basing stage. What do we look for? Is base metals in a bull market? Yes, it's in a strong sector. It's starting to break out. This is my problem, is the oversold indicators, but I'm going to also give you a caveat. A lot of oversold indicators, which I'm going to show you in a few minutes, are overbought. But what I've seen on these huge breakouts, sometimes it doesn't pull back. Number 3, is this a cheap trick? Well, actually, it is kind of cheap. Now, is it at the lows? No. Have we tested the lows a few times? Yes. Have we based an accumulation? But this stock, this commodity is cheap. But we're trying to get a breakout and to ride it up. Are we prioritizing uptrend? Well, recently it has been on an uptrend. Do we have a stop loss in play? Absolutely. Have we been telling you the same system for the last 3 years? Absolutely. But we promise you what constitutes a breakout. And if you could look at this picture over here, it clearly seems we've had a breakout. Now, thus saying that, you can say in December 23, the same thing happened and it went lower. Could it happen again? Absolutely. But let's go over some finer points. Is this stock, is this commodity trading above the 30-day, the 200, the 150-day moving average? Yes. Did it break out on volume? Yes. What's a breakout point? The first opportunity is when a stock initially moves above its basing phase and enters an advancing stage. The second and safer time is when a stock pulls back towards the initial breakout point after the initial breakout frenzy. It's much safer to buy this one, of course, on a pullback. And this is what we're hoping that will happen, specifically for the YouTube channel. But remember the disclaimer. We call this a continuation buying if certain other factors happen during the advancing stage, particularly when a stock retraces back close to its moving average and consolidates. When the stock breaks out above the top of the resistance zone in the snare, it is known as a continuation buying, where this type of buy offers high probabilities of rapid advancement. So if this is going to be like NVIDIA, where every time it dips, it goes up. Time will only tell, but this proven system we've been using on NVIDIA, buying on the dips. This is my problem. Overbought, oversold indicators. The short-term indicator is at 100, and we're going to see where it can go the next 2 or 3 days, and does it go a little lower to work this off without the price moving down. If you go to the short-term, medium-term, long-term, and exit swing signals, all of them are screaming bearish. Thus saying that if it doesn't pull back and these numbers go lower, that's even a better sign. If we go to our faithful CCI indicator, it's at extreme levels. The best move, it goes to 0 and then bounces off the 0 and comes upwards. It's not easy putting yourself out there, but I'm going to do this and make a bold statement. The commodity market will come back soon. And this commodity market might last for 3 to 6 months, but the same thing we saw a few years ago will happen again. You know the catchphrase: study it, analyze it, adapt it. Peace.